Guys, did want to talk a bit about Warner Brothers Discovery. How could I not, right? I will note, of course, that Netflix's market value is well more than 10 times Warner Brothers Discovery. We are waiting on those Netflix numbers after the bell tonight. A lot of people getting their numbers together because you do see movement there. But let's talk about the movement here. A couple of days ago, Jessica Reif-Ehrlich wrote a report sort of unbundling the answer was her question. All options need to be on the table. Then there's an FT story today talking about them at least drafting breakup plans at the company itself. There's a reference to that report arguing exploring strategic alternatives, asset sales, restructuring, mergers would create more shareholder value versus the status quo. And that is what is going on here. Now, does that mean anything's going to happen? Of course not. Companies are always thinking about these things. And in the case of Warner Bros. Discovery, take a look what's happened to the stock price over the last couple of years. That doesn't even include the Archegos move higher. You can see an incredible loss of value. You're going to be very focused on making sure your stock's not $7 anymore. And it was not far from that very recently. And so, from what I understand, certainly they are thinking about any number of things. Is there an opportunity to create value by splitting the company perhaps into what would be a pure content company with the studio and the direct-to-consumer business with no debt, and then putting the linear assets in a separate basket, loading them up with that $35 billion or so in net debt? How would that be viewed by bondholders? What are the covenants like? Well, a lot of it is covenant light, I'm told, but that doesn't mean that they wouldn't get a lot of pushback from their bondholders if they were to try to do that. But again, none of this means it's going to happen. There are any number of things that they certainly might consider. Is there a possibility of selling the Polish assets? Don't laugh. That thing does $300 to $400 million in EBITDA. And I'm told there may be at least some interest there. Whether it's at a high enough multiple for Warner Brothers Discovery to hit the bid, unclear. Gaming, even the likes of CNN. I mean, these are things that conceivably could be sold. Will they be? I don't know. But you would have to believe, as was in the research report from Jessica Reif-Ehrlich, that all options are kind of on the table, including strategic ones. If Trump were to come in, you heard Zaslav say this at Sun Valley last week, well, maybe there would be usher in an easier regulatory environment. Would an Amazon come along and say, all right, now we'll buy you, as we did to MGM? Who knows? Possible. And you also have to be aware, when your stock price has fallen as much as this one has, of activist investors who might be pushing something on you, perhaps not dissimilar from the plan, at least, that that the various things they think about at the company. So none of which is to say any of it will happen, all of which is to say, or at least to say that all of it certainly does seem to be on the table in terms of what can we do to improve the future for this company beyond just operating the assets as they currently are constructed and dealing with what we've discussed for years and years now, the slow but steady, not even slow, the steady and significant decline in linear cable viewers.
Now, you mentioned that one of them would be debt-free? They would spin off debt-free? Why would they do that? Don't you want to offload some of this horrible debt?
Well, you want to offload it to the linear. Yeah. You want to separate that out. You put all the debt on that, and then you have a pure-play content company, Jim. Well, that would be the idea. So you'd have the studio and all the content making together with the content distribution in the streaming world, and then you'd have the old media, so to speak, which does generate a good amount of cash flow, being the key there in terms of meeting the interest payments.
Do you remember when you and I suggested to that great American, Jeff Bewkes, that they should do this?
Yeah.
And remember what he said to me?
What did he say?
You don't know anything.
Meanwhile, Bewkes he hit the bid. He did create a lot of value. AT&T came along. He was very happy to see them, and he did a good job for shareholders.
He sure did. Very smart
so,
guy.
We'll continue to keep an eye on that. The nearest term thing, though, for Warner Bros. Discovery, as I said many times, and I'm going to remain focused on, is the NBA. This is any day, any hour now, we're going to get at least some details here in terms of what are the matching rights there that they have. And as I've said any number of times, you could see this thing end up in litigation. That'll be a story. Warner Bros. Discovery suing the NBA. I hear they're lawyered up at the NBA, so perhaps they're ready for what may come as a result of, again, Warner Brothers Discovery saying, hey, we'll match that Amazon package, and the NBA saying, well, not really, because you're not really a pure streamer, and Warner Brothers Discovery saying, well, we have a deal to match. It was written 10 years ago, and you're not going to honor it. Well, then we're going to sue on behalf of our shareholders. So you got that going, too.
Well, the disparity between what the NFL got and the NBA is what made me say, like, I can't believe the NFL might not try to renegotiate, because the NBA is worth a lot. I think the NFL franchise is best in the world. And it is surprising that
the NBA deal worth some $76 billion over, what, 10, 11 years, right? Pretty big number.
Really big.
Yeah.
But I think the NFL does a fabulous job. I am surprised that they're not making more money versus the NBA.
We, of course, parent company of NBC, were one of the key reasons why that NBA deal got so high.
Yeah. Very important.
But again, we haven't seen any of this done yet, so to speak, but we're waiting.